Pretty slow news day out there. Welcome back to the Junior Small P channel. Gold falls as dollar recovers. Fed chair in focus. Dollar brushing off fresh White House turmoil. Spot gold on track for second monthly decline. So pretty rough 2 months here for gold. And despite that, we've still maintained value above the 1200 mark, which is pretty remarkable in my opinion. This article comes to us from Reuters. We're not going to go into too much detail on it because I really want to get to the next article regarding China and the world gold producing mine supply there. Here we read, breaking: China, world's largest gold producer, mine supply plummets 10%. It really doesn't make too much sense if you think about it. We just talked about how gold's had a really rough 2 months, and the big buyers of gold, the investors, and all of those that play the market are in tune and aware of the information that's out there. They're informed of this. They know that supplies, if this article is correct, are dropping, and yet prices are also dropping with supply, which is not really how the market is supposed to work. Especially being that, well, I guess you could say demand is also in some areas dropping, but the rate at which supply is dropping here, I don't think it correlates accurately with the price of gold, and it might clue in on something going on. But this article is by Steve St. Angelo. The world's top gold producer saw its mine supply plummet by 10% in the first half of 2017, according to the GFMS World Gold Survey newest update. China's gold production in 2017 fell the most in over a decade. The fall in Chinese gold production is quite significant as the country will have to increase its imports to make up the shortfall in its mine supply. The data in the GFMS 2017 Q3 Gold Survey Update and Outlook reported that Chinese gold mine supply declined 23 metric tons to 207 metric tons in 2017 versus the 230 metric tons during the same period last year. And here you can take a look at the China gold mine production. Get the first half of 2016 versus the first half of 2017. You can see there in the first half of 2016, 230 metric tons. There it is, dropping by 10% to 207 metric tons here in the first half of 2017. Now here's a chart showing world's top 8 countries' gold mine supply for 2016. As you can see, China's gold mine supply of 454 metric tons was 56% higher than the second place, Australia, at 291 metric tons. Now take a look at this. Last year, Chinese gold mine supply of 454 metric tons was 56% higher than the second-ranked Australia at 291. Now, these 8 top gold mining countries produced 56% of the total world's supply of 3,222 metric tons in 2016. Lastly, you will notice that South Africa came in last place at 150 metric tons. However, South Africa was the leading gold supplier in the world in 1970. When it produced a staggering 1,000 metric tons in a single year. Think of that. What an absolute decline in production. I've never really considered those numbers. I've never seen them before and taken that into account. I mean, you look at going from first place, a leader in production, coming with bringing out of the ground over 1,000 metric tons of gold in a single year. And now they're down to 150 in last place. And you have the leaders not even coming close to what the former leader, South Africa, was capable of producing back in 1970. So this does line up slightly with the peak gold theories that you see abound. And you also hear peak silver theories out there. But just the idea that perhaps we have exhausted much of the ore deposits and easy ore to get to on the earth, and that from this point forward, production and supplies of these precious metals might decrease and may very well decrease rapidly at this point. Here's another chart showing China's gold mine supply from 2007 to 2017. And you can see there that it peaked about 2014. China gold mine supply forecasted to decline by 10% in 2017. Has China peaked in gold production? Well, you see there from 2014 to now, it has shown somewhat of a decline. 450, then 454, and then 415. Could that have been the peak back in 2014? We don't know. Some of the article that we just recently touched on, I didn't go into a lot of detail and really pull the article apart, but it mentioned that there was concerns in China for environmental things, and that's one of the reasons that they've reduced production is due to environmental concerns. That very well could be an excuse, but they might be making some form of an effort to reduce the amount they pollute, and thereby having to reduce some of their mining methods. And if that's the case, it will still mean a reduction in supply of gold in the long run. Gold to remain tied to the Fed in 2018, RBC Capital Markets. This coming to us from Kitco News. Gold prices will average at just above $1,300 an ounce in 2018, while continuing to be closely tied to the Federal Reserve's monetary policy, RBC Capital Markets said in a report. Gold's fortunes will remain largely tied to the Fed. Both the path of rate hikes and intertwined speculation about the next Fed chair, Christopher Lowney, commodity strategist at RBC Capital Markets, said in a research note on Thursday. And that ties in nicely with this article here. Gold, silver pressured by worries about tighter U.S. monetary policy. Kitco News, gold and silver prices were ending the U.S. day session moderately down Tuesday. Ideas of tighter U.S. monetary policy coming soon, and a rally in U.S. stocks pressured the precious metals today. December COMEX gold was last down $7.90 an ounce at $1,269.80. December COMEX silver was last down 17 cents at $16.67 an ounce. Man, below $17. There was a bevy of U.S. housing, business, and consumer sentiment data released earlier Tuesday that was mostly upbeat. The economic data falls into the camp of the U.S. monetary policy hawks. The data bolstered already firm notions the Federal Reserve will raise interest rates slightly at its December FOMC meeting. All right, some interesting facts to consider going into 2018 and beyond. Having to think about who the Fed chairman might be, what the new policies might be, how much tightening of monetary policy may occur, and how that will relate to the prices and valuations of precious metals. Now, if this just isn't insanity, this is some interesting news here. You got to pay attention for just 1 second here. They're looking at opening up Bitcoin futures contracts or futures approval, and it's sparking fears. This is in quotations there you see the financial crisis all over again. CME said it would launch Bitcoin futures before the end of the year, sending the cryptocurrency's price above $6,400 today. It reminds me of the financial crisis all over again, said Themis Trading's Joe Saluzzi, who worries that Bitcoin is still unregulated and thus open to fraud. I must counter Joe a little bit there because I do like the fact that it is unregulated. I like regulations. I like the government and these traders thinking they can tell people what to do. Saluzzi fears the futures approval could open the door to an ETF for Bitcoin that would put retail investors' money at risk. I think people that are dumping lots of money into these cryptos on their own accord, they're putting their money at their risk on their own, and if they lose it, they lose it. That's their fault for doing so. Yes, ETFs and futures on cryptos will create, for lack of, I don't want to use a foul word, so we'll just call it a poop storm. It will create a poop storm in that realm. And you'll see. I mean, just imagine. Can you imagine what these guys, you give access to that kind of gambling to these cokeheads in Wall Street, and the next thing you know, you're going to have like multi-trillion-dollar investment vehicles full of crypto phantom currencies that could vanish into thin air, or that these guys could run away with, shut down. I mean, there's no telling where their criminality could take it. So it's nice to have it unregulated. We need to keep, again, we're not going to get too into it, but yeah, keep these guys out of it. Keep it off the stock market. I mean, come on. This is crazy. It's insanity. It really is. And once again, I have to be a critic. I will always be a critic of these cryptos and point out what I believe to be fatal flaws and errors in what people think their role might be, what the role of these cryptos might be. Everyone was applauding these as being some type of an alternative currency or some stable place. A currency has to be stable. Let's just talk about that quickly here. It cannot fluctuate drastically in value. You can't one day have a currency that you would use to purchase an apple, and it would take 1 unit of that currency to purchase an apple. And the next day, the very next day, you go to buy another apple, and it costs 25 units of the same currency. And then the next day, it might take a half of a unit. With those types of swings and fluctuations, which take place in futures markets, I mean, you've seen it. Look what happens with metals. There's a lot of reasons why metals are. We're not going to go down that road. Fluctuate. Some of it being manipulation and other things. It's their relationship to other currencies and world economies and all of that. But just if the U.S. dollar were to fluctuate at the rate that cryptos currently are, up and down and up and down and every day, up these huge percentage swings, how could people exist and have faith in it on a day-to-day basis? If one day you drive by the car lot and the car you want, let's just say, for example, it's a Subaru Outback, and the sticker price on it is 20,000, well, let's make up a cool little name here, Dinglebot units. Let's call them Dinglebots. And the next day, you're driving back the same route you took the day before, and instead of being 20,000 Dinglebots, it is 40,000 Dinglebot units. Yeah, that's interesting. And then the next day, it's 18,000. Next day, it's 7,000. And the next day, it's 30,000. You wouldn't be able to really wrap your head around and grasp that these currencies are stable in a place that you would never know when the right time would be. No one should have to time when they get their paycheck or when they deposit their paycheck into their bank and when they do their grocery shopping based on the fluctuations of the currency they're using. And that's what those futures markets, I believe, will create, is just instability, negligence, a lot of gambling, and inaccurate valuations based on just those types of behaviors we have seen the cokeheads on Wall Street execute in the past. And I like calling them that because a lot of them, that's exactly what they are. It's just, and that's not an opinion. That's a fact. I've watched enough accurate documentaries on the behavior and the activities that take place there in the financial world. So when I call them the cokeheads of Wall Street, I do believe it's an accurate term and description, and I think many of you will admit you know exactly who and what I'm talking about and have a picture in your head of these young gentlemen and we'll call it, I guess, gentle ladies that spend $50,000 on a lunch, go here, go there, and flaunt their wealth, their money, and gamble with the hard-earned wealth of your average American. All right, back to the article here. Cryptocurrency traders were having a blast Tuesday after Bitcoin gained approval in the futures market, but not everyone was in on the party. After CME said it would launch Bitcoin futures before the end of the year, fears quickly arose that money would start cascading in, sparking dark comparisons with a financial crisis-like orgy of speculation, which I think is a reasonable speculation. I have no problem with Bitcoin. I like the concept, said Joe Saluzzi, a principal at Themis Trading. I have a problem that on Wall Street, the innovators are trying to package something up and put a derivative label on it when they really don't know what's underneath. It reminds me of the financial crisis all over again. Well, good observation there, Joe. Hopefully you're not one of the cokeheads on Wall Street. Sounds like you might be onto something there and keeping those guys accountable. Strong work. Keep it up. And we'll see where this takes us, where this ends up. Again, don't have a whole lot of hope or faith in it. As you all know, I recently began to play their game. Again, when I say play game, that's exactly what I'm doing. I'm not dumping hard-earned cash into cryptos at all. I am merely throwing a nickel in a slot machine, pulling a lever, maybe perhaps looking for 3 cherries to line up, spit out some more nickels so I can go buy a cheeseburger. That's really it. I'm not looking for a miracle here, and I don't believe in instant wealth. Nothing comes easy. Hard work is the key. Saving your money is key. Stacking metals is key. Real estate is key. Being debt-free is key. You will not gain wealth sitting in a basement, playing Warcraft, and buying crypto. At least I don't believe you will. You might have digits in some mystical, metaphysical wallet somewhere, but outside of the real world, you're just somebody who's playing Warcraft. So, all right, thanks for tuning in to the Junior Small P channel. Hope you all had a great and pleasant day. Hope you enjoyed today's broadcast. If you did, like, share, subscribe. Check it out. Check out the archives. And as always, appreciate you all being here. Have a good day.